All right. Good morning, everyone. I'm just going to confirm that you can hear me. So anyone who's already in, I can see there's quite a few people who've signed in. Please just give me a thumbs up that you can indeed hear me before we proceed. Great. Thank you so much. Thank you, Brenda. Thank you, Gurpreet. Yes, so we firstly want to apologize sincerely for the slight delay in timing. We hope that this doesn't mean that you're going to log off 4 minutes earlier. But I just want to say a very, very big thank you for joining us today for this wonderful workshop. My name is Mel, and I'm just going to take you through what was Nairobi Garage first before I hand over to the speaker. So it's a pleasure to be here today, and we appreciate you taking the time to engage with us in this forum. As I said, my name is Mela Baseneka, and I'm the community manager here at Nairobi Garage in Kilimani. For those of you who may not be familiar with Nairobi Garage, allow me to do just a brief introduction as to who we are and what we do in this Nairobi space. We are basically Africa's largest and coolest business and innovation workspace and community, co-working community, that is. The flexible workspaces at Nairobi Garage give you and your business space to grow and get connected to large networks of similar-minded professionals to increase your impact and your scale as well. Our spaces offer a variety of amenities, including fully furnished office spaces, breakout spaces, reliable internet, and bottomless tea and coffee to keep you alert as you work. We offer 4 different items and many more, but to basically go through that, it's a virtual network of about 1,000 entrepreneurs and professionals, home to over 150 growth-focused innovative businesses, weekly events for members in the wider business community, and we also have 4 central locations, so Kilimani, Karen, Spring Valley, as well as Westlands. We believe that co-working drives innovation because whenever people share physical spaces, they're able to collaborate and to create things they wouldn't have done on their own, basically. We host workshops like these every month to expose our members to a larger business community and explore areas of interest to entrepreneurs within our ecosystem. Well, today we will be tackling the interesting yet sometimes confusing world of investments. Our facilitator, who's seated right next to me, so you'll see me bouncing over to him every so often, will be Alex, who is the CEO of Moran Capital and is a seasoned expert on all matters money. While I may not be able to give him a just introduction, I will definitely allow him a chance to do so himself. So get out your pen and notepads ready if you want to take notes, because we will be learning a lot today. And please engage with us in the chat section. Leave your questions in the comments tab and participate in the poll questions that I'll be putting up soon. But other than that, thank you all very much, and over to you, Alex.
Right, thank you. And I hope everyone can hear me. Let's just check because we're using your mic.
Mm-hmm.
So everybody can hear me. Morning, everyone. Yeah. So thanks, and thanks for joining this morning. I know it's a chilly morning in Nairobi and 40 degrees in London. Just in case anybody is checked in from London, it's 40 degrees today, so a major heat wave. So welcome from wherever you are, and thank you for taking your time. We'll be very specific on time here. Just started a minute or 2 late, but thanks for joining. My name is Alex Rorie, and this is a great opportunity to just catch up with everybody in a season where there's a lot of stuff happening. It's election season going on, and it's also a lot of stuff happening around the world with the global drama around Ukraine and Russia, and then we just come from COVID. So we thought we'd put together what we see, from our space in terms of what do we think are the strategies that you can use to navigate. Now, this crisis and the complexities that have come up. And in terms of background, of course, we are a wealth management firm and been doing the same work for the last 23 odd years. So we kind of look at the market and have some ideas as to what has been sustainable and what will be sustainable. And even looking at the various markets that are defensive over this types of crisis, what can we be doing? But also keeping in mind what is the most important thing to think about, because the crisis is for a season, and these are all seasonal issues, cyclical issues. We'll just have a very quick look at that. And great to be here at Nairobi Garage, just having a chat with the guys in tech. So everybody is really plugged in. You all know what's going on. So it's just a matter of putting this data together in a way that those who are starting as well as those who are seasoned professionals will be able to track and get value out of the conversation. So we've put together a presentation which will just put stuff together. I'll talk through it fairly quickly, but I hope you will dig in right to the end, because we're going to drop some ideas about what you should be thinking about in terms of what should I be doing at this point. I'm working hard. I can see some things that are working for me. How do I make sure that this is sustainable? I see tech, the gurus are the ones who are leading the industry, as well as financial services, biotech. What do I do to make sure that I get there and I stay there? So that's what we're going to discuss. How do we navigate through this period so that we are able to get through the complexities that we see? So our theme today, our brief, and what we're trying to capture is navigating the investment maze with the rising complexities. We'll talk about the complexities, and then we'll shed some light as to how to really get through all these complexities. So I did a quick intro. What does Moran do? Of course, we do investment advisory, which is just telling you those who want to place assets somewhere, somebody who wants to invest. I've got some money. I need somebody who's reliable, knows the market. That's really what we do. We look at what you're looking to achieve, and we make sure that what you're doing matches your kind of style, so that we are not all the same, but we all have somewhere to go. So how do I make sure I can get there? And then we do wealth management, which is, guys are busy, they don't have time to manage their own money, so it requires a certain expertise to do that. So we provide the expertise to manage the money, while our clients are obviously busy doing their passionate and career objectives. Now, essentially, we are managing about wealth in the scope of about $1.7 billion for our clients globally. But we don't hold the cash assets ourselves, but we direct how our clients are managing the assets. We also do risk management, which is making sure all the work they are putting is not lost through professional issues. You're sued for some professional obligations, or really you lose an asset. So we make sure that all these things you're working for are not taken away, they're not eroded by risk situations where it is an occasion of loss that can happen. How do we make sure all these things are also affordable? So risk management, a lot of people avoid doing those things because they feel it's expensive. We provide strategies to provide the best risk management at the most affordable strategy possible, so that you really have what you're looking for and what you can afford, both in one basket. We also do private equity. I'll talk about that a bit more, plus private banking, where we have clients who have global operations and they need a bank and a manager who can look at their positions across the world, so that one person who's able to coordinate that. Moving on, we want to start really by putting the picture, because one of the things about navigation is really understanding your environment. You can build the best ship, but then you don't understand the environment. The guys who did Titanic know a lot more about that. The guys who build you build planes, You need to know how does it work, when the sonic booms come out, how will it work, and those kind of things. So we are facing an unusual decade, and if you look at what has happened recently, of course, we have Ukraine. The war has had some impact. When we were having COVID, I was just telling somebody, we already knew this would be a crisis. And before that, you go all the way to 1910, hey, no surprises, these things were still happening. So the environment we are always operating in has always provided a crisis, one or the other. And most of you will probably have come through one of these crises. The Spanish flu knocked off 100 million people from the world. The financial crisis in 2007 is probably the most recent. So you know about this crisis, and the environment in which you operate in is not allowing you to operate as if you're separate. So everything you're doing, the environment is either presenting a challenge or an opportunity. Every 7 years is a crisis, at the very least 7 years, but for us in Kenya, you have these 5 years of elections, and we are back to this season, which is now carrying the elections, as well as we are still having COVID, and now we have Ukraine. So all these things are creating crisis, but luckily, we are not just the only ones. So it's not a personal issue, it's really a global issue. Although when you listen to the politicians, you think it's a very local issue, but it's a global issue. And what do we do? What do you do? What do you need to be aware of? You need to be aware this is going to happen because it keeps impacting your wealth, and it keeps presenting opportunity. You guys would know well about it. Zoom has just come on in. A lot of platforms have come on in. The one we're using today, I'm sure, has also picked up a lot. And people have become very successful by providing remote working because of this crisis. So what do we do in this space? I'm sure each one of you has been impacted by the reality of this event. So let's just look at what is really happening so that we figure what is the crisis that we are facing and what can we actually do. So in terms of looking at the impact of all this crisis, there is obviously the first one, which was Corona. If you look at February 2020, immediately the World Health Organization announced it. Stock markets crashed globally, and that had its own impact. This again happened, and before in all these crises we've seen. So that if you're what we call somebody who works with trends, a trend analyst, you have seen that there's certain things that have happened every time there's a crisis, every time there are elections. So you'll see this kind of crisis happening over and over. Again, we are seeing pressure around prices of commodities. We see this because of the Ukraine scenario. You can see there wheat prices, Brent crude, all these things, the prices are going up. So what is happening? The complexities are happening, a dime a dozen. Coronavirus created a major disruption in supply chain. Nobody was moving, so goods are not moving. So there's a gridlock in the shipping businesses. So goods are not getting around. Cars can't get fixed. Prices of cars have soared, even second-hand cars, because new ones are not getting to the market. So there's a decline in trade. Commodity prices are going up because of this supply chain disruption. We see increase in credit default. Guys are not going to work. People are not working, not selling. So wherever I have some liability, so anybody who's looking at leverage, you really are under pressure because you need to pay, and then goods are not coming. Trade is going down. However, again, it depends on where you sit on, because that means that where people are not moving, then technology needs to help in communication and various other services. So again, all these things which are challenges are creating opportunities. We see political dynamics and military conflict, which is what has caused us to have a lot of pressure in commodities as well because of what's happening in Ukraine. We have persistently high inflation. I was just looking at the price of sausages, and I keep that in mind because I've got 4 boys, 3 boys and a girl. And the sausages are a very constant breakfast item, which now I can see the price has moved from 500 all the way to 724, 800. I mean, we're talking really about 60% up. And that is a major challenge when you have persistently high inflation on food commodities. So this is going to be a major, major issue. And when I have our team, we have our team of wealth managers. We have with me Lydia here, and she's one of our wealth managers. We have a number of them, and they are able to talk to clients to see how to adjust their portfolios to deal with this high inflation, either on how you're investing or you change your consumption to make some savings, because you may want to change brands in the short term, so that you're able to manage these price changes. I'm happy to see that Mungai is now going to be retailing at 100 bob, but for other people, there are other commodities that we think about, and we have to figure out how do we deal with that. So again, there's what we call quantitative tightening. That means governments are trying to figure out how do we control this inflation, because inflation affects everything, including how governments pay back their loans. So this is becoming more expensive for governments to pay loans. So they figure this money that people have, we need to pull it back and reduce the rate that inflation is growing at, even fuel. So what do? Their response is normally what you call a quantitative tightening. That means they put measures that pull money out of the market. You'll see increased rates. For example, in Kenya, you'll see the treasury bonds have basically gone up to about 13%, the infrastructure bonds. So the reason they're doing that is also trying to pull money out of the market, because they figure for a time people saved a lot of money, they're not going anywhere, so they have this money that is chasing very few goods, and in fact there are very few because very few are getting here. So you see that pressure coming on, so government figures, can we pull out some money? And this is also driven by even America's Fed, who have decided to do some quantitative tightening. And what that all means for us is that there's less money in circulation. And when money is less in circulation, then you have labor shortages. Nobody's investing happily. And when you have labor shortages, you then have stress levels in the economy going up. Guys have medical challenges because you have a lot of stress, you're not moving. So this kind of things really catch up with people. So the complexities are really a dime a dozen, and they've become very, very obvious, affecting a lot of families, and that it just exacerbates the crisis. So when we're thinking about investments, these things are in our mind, and the question is, how do you overcome these kind of challenges? For you sitting in this space, I'm sure we'll also be looking at investments such as Bitcoin, which you can see, obviously did very well in the 2014s, coming from 145 all the way to a high in the 60,000s. I see yesterday we were just about 22,000. These are investment options, but also affected by what's happening. If you look at, obviously, the period since COVID, it tended to be a bit resilient, rise and then drop again. So where does this also fit in my portfolio? Are questions that people are always asking. Do I need to have these currencies, these alternative currencies? How do I manage this within my portfolio? Considerations that definitely everybody needs to make, and make sure that, if it's an opportunity, yes, how do we harness the opportunity? But also, given the shocks, how do we control that environment, and how do we make sure it doesn't take us back to zero, wipe us back to where it came from? I think the knowledge is that there will be a lot of crises going on around the world, and even internally. So those are external issues as well as internal issues. We have very many challenges. Our clients are always fighting, either the debt, right from that crisis we've talked about, other indiscipline, marketing pressure. There's so many things people have to think about. But a lot of times, the way we manage this is to look away and just work hard and hope that the money will sort out these issues. But unfortunately, the tide keeps hitting you and you're like, okay, this is rocking the boat too much. How do I ensure that I can stabilize this boat despite all these external and internal pressures? How do we make sure that we can contain this pressure? And the idea is to, Richard Branson says the idea is to, protect the downside when things get bad. Because when things are good, you're happy, you're earning. How do we make sure that we are okay even when things are bad? Those are things to think about. You protect the downside, which is the side you don't see. What tends to affect you a lot in investments is what you don't see. And that's what Richard Branson is talking about, the downside. But we also just look at how to make sure we are not just always dealing with crisis. How do we make sure we can navigate crisis or not? That's really the best plan that we are looking at. And in this case, we are talking about what's my investment strategy in this kind of crisis? What am I supposed to do? What will hold true irrespective of the crisis that will keep coming up? What do I need to do? Because the idea of the bull and bear is a lot of timing the market. But this has just proven that you can't time the market. The market just keeps shifting because there's always a crisis, but you can look at trends. But then exactly how do I make sure I have consistency, that even though I am still trying to time the market, there is consistency in my strategy. I think the first very critical thing I'll tell you is that money does only three things, right? Only these three things. We preach this, you've got to know money just does three things. Money is to be held in reserve for crisis, because now we've seen there is crisis. It's a potential in everybody's life. You've got to deal with that and know how do I deal with my mortgage in terms of crisis. How do I deal with my domestic expenses? What am I provided for? You keep hearing people talking about having an emergency portfolio and that kind of thing. That responds to this crisis we are talking about, just having the short-term response, because we expect redundancies to happen, impact on education. Children are going to school, you need to buy laptops, you need to do all these other things. So that is a knowledge now we have been given, whether we wanted it or not, because suddenly you have to deal with children who are asking for different things. We didn't think we needed it, now we know. So you need to provide for what else may come that I actually don't know. And I could be made redundant or opportunity, my business, especially in the tech space, one business is doing very well today and then the market changes and then, you really don't know, you've got to change your space. So that's one space that you need to know money must go to. So first we want to know where should my money go. Money must deal with contingencies and you must put it in a very liquid space where you can get it very quickly. The next thing is money does operational management. So you are running domestic expenditure. You're paying your normal rents, you're paying your fuel, you're doing your hair, you're doing your maintenance costs. I see a lot of people, in families having challenges, discussing, why are we always discussing dog food and all this stuff? Hey man, you've got these things in your house that you've got to run. Yeah, you've got to run the car, you've got to have a life, you've got to do these things, you've got to do house shopping, you've got to go on holiday. So all these things have to be provided for, and you've got to make sure that these resources separate from what is the contingency, because then, if you're gobbling up your operational, your income totally just running your current affairs, then the shock will come and then we have other problems, and that does always happen. But our role is also to make sure that we've provided for that reliably. The third thing money does is growth factors, which is expenses related to investment, the future which is unknown. So we first deal with these operations are the known, contingencies are unknown, and growth is also unknown. What do I expect in the future? But you could plan for it. You have higher education. I want to do some investment in my business. I want to take some project I want to invest in, and I see an opportunity somewhere. Where will that capital come from? And more importantly, things like travel. I want to travel. I want to have passive income for my retirement. Money comes in one stream, but it really just needs to be spread out to make sure that you have various streams so that you're not the only money maker in your space. So you've got to have alternative sources of income so that your growth is not dependent on your hands on deck. You know, when you're tech or you're in that space, your hands, your mind, everything is your tool. Imagine that tool is taken off the table, and then your family still has to run. So those growth factors focus on that space. So when you're doing your investment strategy, you've got to think about how do things get ordered? How do I move from where I am to the future? So a lot of times we try to do all the things at the same time, which creates some drag and stress. The idea really is to start with what takes away money from you. That's, you need to protect that, and then build what gives you money when you're asleep. And that's why we say, in terms of navigating these spaces, you need to move from simply clearing debt, making sure that there's no risk to you in case of a crisis. In case I lose a job, I have managed or cleared my debt so that I put it in scope that I can actually deal with it when I need to clear it as soon as possible. Then I have contingency planning, which we have talked about there. I now start dealing with my reserves. I deal with my life goals, that is my normal operations. And then I look at growth in the future, passive income. Income that will come in whether I wake up or not. There are guys who are working, needed my capital, and those guys will be able to keep me going over the long term. So we need to plan that in an orderly fashion. And one of the things that we use is a tool to give you your goals in currency, in dollar, tangible fashion. A lot of people don't write their goals in these formats. They have imagined goals, and we really try to help individuals to get through this, whether it's in any currency, to figure, I want a house. When do I want the house? So that we are able to tell order of things, so that I want to do some retirement planning. Should I start that now, or should I start it in 5 years? I want to put up a business. When do I want? Now, the other thing is, once I know the goal, how much is it? Because we've got to know where the money will come from. And indeed, without knowing what challenge you have on the resources you need, you always think you're cool. You figure, I'm all right? So there are billionaires in the world, millionaires. Which one do you fit in? Because you only know your strategy when you know your goals, right? So there are people who've never known their goals, so they don't know whether they are hitting target, because you're just spreading yourself all around. I mean, if you want to define a goal, I want a house, I want the house in Spring Valley, it costs me 25-30 million, I want to buy it in the next 5 years, and I have some money now. So what strategies can I employ to make sure I get this from an investment perspective, a savings perspective? What do I do to actually acquire the house? Most people will say, I want a house, will not define where and how much. So when you're trying to put coordinates as to what's the strategy to get there, nobody actually knows how to help you. You've got to know the details of your investment so that we can navigate towards it, so that we also sure we are on target. So we help you looking at what's available, what's the shortfall, and then we can tell what's the strategy. Because if you've got, you want to buy a house and you want to buy a house for 30 million, you've got a 25 million saved up. It's no emergency, it's a slow approach to it. But if I've got 2 million and I need to buy a house for 30 million in the next 5 years, somebody needs to give me a really rocking strategy. I need to be talking to somebody who really knows what they're doing. And we have helped a lot of people navigate through that space. Because we understand the different strategies based on where you are. So we don't need to apply strategy for everybody in the same pace. We need to know where you are. You need to know where you are. We have various tools that we can help you with. The other thing we need to know is that, guys work like life is ending just now, so I need to do everything now. So you find that there are people who don't understand that strategy always follows as well your life cycle. There's a time you have little money, but that's not a problem. Having little money is not a problem. Having knowledge is also a tool. So money times multiplied with knowledge can create a lot more wealth than you could by buying land and real estate and doing one or two things. Knowledge is a very serious thing. The other thing you have when you're in this age, which is the initial space, which is the accumulate space, is you have time. You have a lot of time to put in to do research and to provide your services to somebody, which you will not have later on in life. So you have different resources at different stages of your life. So at your 18 to 45, which I would figure could be a certain population here, at that space, what you have really is knowledge and you have time, which can be used in somebody else's space to accumulate wealth. You also have energy, so you could do multiple things. And really that really works out very well because you could be doing various projects, running a side hustle here and there, and that helps you. So at that age, you have the energy. When you come to 45 to 65, I have just entered that space, and you really do have to have some assets, and you need to consolidate these assets so that you don't run around too much. You now start working around efficiency. Just what is giving me the best return, and I need to focus there so that I am now in, I would say, senior-ish, middle senior, upper management. So at that space, you now have a bit more resources to be able to command some transactions. You can do your leverage. You're now somebody who can use your name very well to get to move assets quite a bit. So even the investments you get into that time, you could be doing investments, for example, side businesses when you're younger. But at this point, even your reputation and your time does not allow you to do too many hustles. You're stuck up in contracts which don't allow you to work with competitors. So you need to negotiate better perks because you also don't have the ability to spread yourself too much. I'll not stick on that too much. You're going to deaccumulate, which is the next stage of your life cycle, which is high in expenditure. That means you've got to get investments which are regular income paying, so that your kids are in university. This is expensive. You yourself are starting to face various medical challenges, so you need to go to a lot more health consultations. So you've got to figure, okay, I need a lot more money. I'm seeing doctors. I need to travel. I need to chill out. I need to deal with my children in university. This is a very expensive stage. And without knowing those facts, you find guys really having a party, buying nice mansions, everything when they are at 18, and then at 65, there's no fire. Yeah, and this is a space where there's no comeback if you're not very careful. So the strategy at this point is to have investments which are really generating regular income, and you're not drawing them down, but they're giving you strong regular income. And then the next stage, obviously, you've got to think about how to transfer wealth, but that's what we are on to right now. But we would discuss how you need to have proper settings of how to transfer wealth in the future. Now, I will give you the information here as to any time you think about making an investment and looking at an investment you want to make, or are you an investable asset? There is no shortage of money in the world, and as I said, we are managing quite a bit, but we are also very picky about where we put money. Money is not in short supply. It's good product, it's good projects, it's good people who are in short supply. So when you're looking at an investment, you're looking at it from this space. I call it the inverted triangle. The most important first, and that is market and regulation. When you're trying to look at investments at this point, what you're looking at first is how big is the market and how fast is it growing and how well regulated is it? Because this allows you, this is the most important risk factor. Because if you are in when you think about risk and regulation, most people think about the people, but there's also your own review as to, just how protected is my investment. Forget who comes to tell me about the guys, how well educated, what paperwork they've done. But in risk assessment, you've got to think, what if the market collapses? You could have everybody well regulated and knowledgeable, but then the market collapses. At one time, Motorola and the likes were leaders in the market. The next thing, they didn't pay too much attention to whether they need to develop more on the text or on the simplicity of the phone or the network connectivity. They didn't know where the market is. And soon, Apple featured there, and then Samsung, and a few other players, Oppo now, and a few other players, and suddenly you are wiped off the market. So if you had invested in that business, you had a very high risk because the guys didn't understand very well. You've got to go into regulation, because if things go belly up, who do I need to, call so that I can make sure we can get a recourse? Then you have structure and accessibility. How easy is it to get in and to get out of these investments? Are they guaranteed? Is the return net return, variable return? What is it? And when you look at the cost of the investment, is this investment return I'm being given net return? Are there other management costs? All these things you've got to know, so that even as you're looking at the investment market, you can have a level playing field of assessing investments, because there are very many. We probably have like 20,000 exposure. So how do you choose? You've got to have a level playing field. And what can be in your portfolio is a lot of things. A lot of things can show up in your portfolio. You can be running your project now, you've registered your business, so that's one possible business position. And if you're not having a business, you could enter a business as a shareholder or an ordinary shareholder. You can get into private equity, so you buy a listed company or private company. And these opportunities, we have them, numerous of them, from here to Asia to all over the place. You get returns which are amazing, very strong return in dollar, in Kenya shilling. So we get these opportunities. You will get returns which are anywhere 18 to the 20% in that space. So business really gives good return. We have opportunities in real estate. So these opportunities are giving you an opportunity to participate without necessarily managing. And this is important, because real estate is a defensive stock as it is. We keep saying we are not creating anymore. And then there are paper assets, okay? You've got to think about paper assets, because I typically say all investments are paper assets, because if you don't own the title to this property or the business, it really is not yours. But it's good to think, where do unit trusts fit? Your typical mutual funds and ETF, exchange traded funds, where do they fit into your portfolio? Where do bonds fit in? And where do shares fit in? Now, you will realize that the options are many. There are alternative investments like derivatives, where you don't even need to be trading in the underlying commodity like tea, but you're making value out of it because you can get it from one market and sell it to the other. So that's what a derivative is. You don't need to own the commodity, but you can get value out of trading it in different markets, and you get very good value. I'll touch briefly on that because we do a lot of that. You could have, obviously, the digital currencies, the crypto. That's a space that, obviously, as I mentioned before, is of interest to 4 million Kenyans. I was very surprised to see 4 million Kenyans already had, gotten into crypto. That's fantastic. The question is, how much did you allocate to your portfolio? As you see down here, everything is how do you allocate on your portfolio. You could probably have allocated 65% of your assets into crypto because it says shares or aggressive at the younger space. So if you are the younger high risk taker, you could have done that. But then that would probably not be the wisest to put all 65% of your exposure into one portfolio or just into crypto. But there are guys who did that and they made some money when it was 100. I think they bought at 900 and they are now at 22,000. So whether the market went up and came back down, is not an issue, but they went all in. Those are really high risk takers, and they can do that now that they're young. But as you go older, and as I was discussing about your life cycle, you really need to think about how that portfolio is being built. And that's why we have a team to just help you build this portfolio and make sure that, yes, we are looking for high returns, but it also comes with some shocks. But you can also deal with some shock up to some point of your life. So all these things, including commodities, we can give you access to how you can actually purchase that, and in a way that is market neutral. We understand the market. I will probably just tell you that shortly, so that at the end of the day, what you're looking for is, how do I build my net worth? Because what I consume is my net worth. You know, if you're a CEO of a business, you are, because you're the leader of your own space, either your family or yourself, you're single, or a group you advise. The key thing you want to ask yourselves is our net worth growing year on year? And this is the question that any CEO should be asked. All these things that you're doing are to grow the net worth, to sustain the family, the business, the group. That's really what you're doing. And the sustainability of it is driven by understanding the market, so that year on year, you have what you call continuous growth, as compared to shocks, and then you have to do redundancies. People don't know how to keep this sustainably high, and we help a lot of people to just figure out how to sustain their wealth. So the idea is that we always review with our clients every 3 months, every 6 months, and every year, as to how is this growing, and can we get a direction as to, is it, you know, our assets here which are a problem, or what's going on. We review to make sure that you're in line and you are able to, you know, respond accordingly and on time. So I'll just a quick one on, in this kind of crisis, what's a winning strategy? Of course, you've got to have a global asset allocation. That means that no single market is giving the best returns. So you've got to see somewhere where you have a global asset allocation. And the word dynamic is because you are moving as well in age and knowledge and resources. You're always moving, so you can't just think, I invested this once and, you know, I don't care what happens globally, the external environment. You really do have need to have a global asset allocation, which responds to which markets are doing well. You know, there are investments which are defensive. Am I in defensive assets? And make sure that you're taking advantage, because crypto went up. Safaricom at one point was at 42, came back down to 23, is now in 31. So are you dynamic? Are you taking advantage of these movements? That is very important in such a cyclical market. The other thing you've got to do is reduce leverage completely in terms of your investments, because one small shock in the market just tends to wipe out your value, because it multiplies the number of risks that you're having. You know, if you've borrowed such an amount to do investments, obviously the risk in the market coming down is not only to you, but then the corporate is also chasing you. You want to be deleveraged, essentially. A lot of times when we go into businesses, the first thing we do is bring in equity to remove leverage, so that people are able to operate without fearing cyclicality or the shocks of the market cycle. And in order to get proper investment, means you have to have a good, strong project plan, business plan, so that there are so many people wishing to put money into people's businesses if they are well documented. So how well documented is your business plan? This is important, and there's a lot of money chasing it. It's in trillions. I think just the top private equity investors globally are doing what? About 150 trillion dollars, just investing in various other businesses. So there's money chasing people around. And then you've got to think of a fixed return in this season. Because of the variability and the changes, elections and crisis after crisis, you've got to think about having a fixed return. So the investment you're looking at, make sure part of your investment is in a fixed return, so that it's able to give you the guaranteed income as well as no volatility, because factors are changing so rapidly. disruptions in supply chain. Governments are doing what we call quantitative tightening. So you need money coming in separate from your business, because there's also risk in business. And that comes from getting a fixed return on your investment. Of course, you also want to look at the quality of payout. How regular is the payout? So you want to make sure, am I getting quarterly income? Because the farther away it is, the more stress is, it comes on you. So you really just need to look at what quality of payouts do I get? Is this regular, quarterly, monthly, annual? What is this? So the closer it is to income, the better it is. So we always work with investments that give our clients quarterly income. So the key mitigation in this point, obviously, is to invest in yourself at this early stage in terms of the knowledge of where are these investments, what do I need, why do I need to be invested in this space, so that it can give you the drive to stay on course. Yeah, because your skills and your knowledge, as Warren Buffett says, cannot be inflated away. It can't just be wished away. You can transfer it anywhere. Anywhere you go around the world and you say, this is what I'm looking for, you will be in the right place. You get the right results. So I've just shared some examples here. We have, I've put together investments which we are doing, which are very liquid. You could withdraw anytime. We have them in dollar, in Kenya shilling, in dollar, and sterling, and euro. And these ones show you, you can get your 8-9% for a money market. So you check your bank and see what kind of returns you're getting. This is a much better return, and you can see what we've invested in. We've invested in gold, natural gas, silver, through one of our funds called Abans Mansal. This is just an option we are giving you to have a look at. And this is a money market space. I can withdraw the money anytime, right? So it's making money for me as I'm holding my reserve. We also have another investment here called Padas. You get a guaranteed 12% on your dollar or your sterling or your euro, and this will help you with that regular income. That's very important. And what we do in one of this, we are obviously arbitraging across the market, and the other one we are arbitraging on commodities. One is debt, the other one is commodities, and these are big transactions we are doing. Maybe, as you can see there, 100. This fund is about $8.5 billion. And you can take anything, an investment from $10,000, you participate in any one of these investments, and you start getting a good return across the market. Irrespective of what happens in the market, you're sure that the size and the strategy the fund managers applied, even in 2020, when there was a crisis, we made the best return in the money markets. We made 9.46 on a money market fund, a call account. You're making 9.46. You can see in 2021, 8.24, and so far we are tracking just about 4%. I think we will definitely close at another 8 to 9%. This is good because you're just holding cash. So can you imagine what you can do for other portfolios which are a bit more aggressive? And I've shown you some here, just Kenya shilling. You want to make sure that your regular investment income is coming from things like bonds, the government infrastructure bonds, and that kind of thing. This is something we can help you with, so that irrespective of how volatile the market is, the government will either tax us, borrow, or print money. Whoever says government will not pay, I don't know. They have options, right? And they will do that. And you see a lot of people have been investing in this space, especially the bonds. Most of them understand the bonds, a bit of the bills, and a bit of the infrastructure bonds there. So you will not be alone. We definitely have been seeing a lot of people investing there. At the end there, we have private equity, which, as I said, we get anything from 18 to 20s, 30%. And you want to be a bit more aggressive, you get 4 times your money and this kind of thing. We are able to buy companies and sell, and this strategy outperforms all other asset classes globally, consistently for more than 20 years, not just 10 years. You get a return which is much stronger. And what we are doing here is investing in companies which provide services to guys like Facebook. We are doing their real estate. We are doing digital platforms for BMW. So what do you want to do is to have an investment that whoever is managing, first of all, has the right skill. Secondly, we know your goals very well, and you know the goals very well, so that we are tracking despite the market cycles. We know exactly what could happen, and we've taken a strategy which will get you to your goal. And as I said, you can enter these investments, and these are just some of very many which you can get from our managers. They can help you. You can call us up, and we are able to help you navigate so that these investments have had no shock in the crisis, because they are well managed by professional managers, and the skill there is very high. And for that reason, we expect that it should be able to get you to your goal, so that even though you're doing your other things, your other business, you have a portfolio which is stable and is being managed by a professional. As I said at the beginning, what you need in order to be successful is to understand your environment, have the right team, have the knowledge of what's driving me to achieve this goal, so that even when I feel down, this factor will still push me to continue until I get to my successful stage. Also understanding that you must plan across your life cycle. The world is not coming to an end, guys. So really, let's put this information to use. I think I have 5 minutes, and our connect details are really there. And thanks, guys, for listening to me do that speed presentation. I hope you get those details, and we can share them for sure. I see Isabella. How can we access the recording? I think this will be shared by Mel. Yes. She's very able to do that.
Yeah, so we'll have a recording up on YouTube of the entire, obviously, session. But Gurpreet did ask, sorry if I'm butchering your name, I'm really sorry. Gurpreet asked if you'll be able to share the slides. That's completely up to the team at Moran Capital. I don't know if they're willing to. I can understand if they're not. But I will give them.
What do you think, Mel? Should we share?
Yes, you should. But at the same time, yeah?
So we will share to the participants. Yeah.
Only to the participants. Okay, that's perfectly fine. So I'll accumulate that and send it out to everyone who has joined us for this. So yes, Gurpreet, you'll be able to get the slides. Edna asks, or maybe we should start at the bottom actually. Nicholas asks, at what point should one have life insurance, and where would you place insurance? Is it contingency, operations, or growth?
Yeah, that's a fantastic question. There's so many options. We've got to figure which ones to share at any one point. Life insurance is very critical. Starting from the basic, like your term insurance, you need it the moment you start earning a penny. Yeah, but you need to check which ones am I getting, and do I get the right price? I mean, for about 3,000, you get like 10 million worth of term life insurance. But then that's good, because if you have no other asset, the moment you pay that one and something happens to you, family has an asset. But as you go ahead, you then also have your family, your children. So then you start thinking, do I do endowment? But you've got to ask yourself, the person doing the endowment, do they have any other assets? So we're always checking for that. But for sure, life insurance is as critical as breathing air. The question is, which ones should I be getting into? Because the pricing structure is also quite different.
Okay, Nicholas, I hope that answers your question. If not, please feel free to let us know.
Yeah.
As we go on to Edna, who asks, there's a big focus on MMF performance, but how are equity funds performing in Kenya in terms of yield?
Yeah, so I just mentioned something very quickly. I was just saying about 3 weeks ago, we saw Safaricom, for example, at 23. Yesterday it was trending at about 31. The reality is there's opportunity. There's opportunity to track. And the question is, how regular do you track the market? Because we don't want you to get in and have a passive strategy and then you miss opportunity. So there is opportunity. It's not just now, there's always opportunity. Right now, it's what we call blood on the streets. this is a time to buy because a lot of people, everything you ask them is, hey, but yeah, elections, wait for elections to be over. So the market prices obviously dip. There's obviously the pressure because Kenya has about 60% plus foreign direct investment. That means foreigners who invest into the stock market, they take about 60%. So right now they are quite distracted with what's happening globally. So there's a bit of opportunity for you to think about it as a long-term investor. Definitely a place that we've been participating in. We have just been placing clients in various stocks. So we normally look at stocks which are sustainable. Equity funds are a whole different discussion because those are fairly long-term. And sometimes they get quite a hit because they average across very many stocks. So they've been taking quite a hit. They are really down. But there's an opportunity for people to pick up various stocks because the pricing has really come down.
Awesome. Edna then asks, how much does Moran charge for their services?
Now, we typically don't charge for advisory services because there's management fees. One of the things that drives us to that space is obviously that Africa's wealth, compared to the rest of the world, we are like 1% of the world. So we provide advisory service at no cost. What we do have is a management, because we are very convinced you will want us to help you with the service. We do have the fund managers managing the funds, charging about 1-2% fees, which from our space is enough to keep our business running. So we actually don't charge on advisory. We want a lot of people to just have this knowledge and be able to change the prospect for Africa. So we don't charge, whether it was here or anywhere else in the African continent, we don't. However, we do charge corporates because every time, you've got to have to print and to do all this nice things. So if we are going to come and also discuss from a corporate perspective, and we have to print. Luckily today, Mel provided a platform. If we really do have to come and sit down and have a day's training, take a few people through, then there's a consideration to meet the cost of the day, but not an advisory perspective. What I'm telling you here would ordinarily cost about $5,000 per person, and then it would be difficult to sit in this particular session because you're like, I don't know what value I'm getting. Eventually, we have clients saying, "Oh, can I pay something?" But we tell them we already earn management fees. Yeah.
Interesting. So Gaio asks, and I don't know if there's any confidentiality clauses, but Gaio is asking any client success stories you can share. I guess you don't have to speak of the
names.
Yeah, you don't have to give names.
I'll not give names, but we are holding a portfolio of 600 high net worth clients, and that could be anywhere from those guys who are starting but they still have big vision, and the guys who already have big vision but have no time to manage. So we have people who've been made redundant. I'll give you, for example, they were wondering, I've been given a going home package, 20-30 million, and now I need to start build a house, do something. And they came to us. What we found was, well, before you start applying this money to any ideas you think, I don't know, farming, I don't know, these things you want to do, can you sit with these guys and they may give you some options. We were able to invest those funds, and they today have more income from the investments that we've done than they were getting from their salaries. So, they're wondering, why should I go back to work? So now it's a matter of doing other things which are passion projects. I mean, we provide a lot of freedom. We have people in the tech industry who have invested significantly. And the reason they do that is we provide regular monitoring and review of investments across the board. So somebody will come, give us $500 million, and we are giving returns that run their business, their home, their travel, their everything. So I mean, if they just do business for passion purposes, not because they earn for income, and that means we are paying north of 100 and something million every year. So they 10 million a month in income. So this is a space where we help a lot of clients that way. Now, there are those who have come to us with even less because they have never been organized. So they didn't know where does their money go. So the guys suddenly ask me, I've never seen money in my account. But we tell them it's because the goals were not driving you in the right direction. Once we have your goals in place, I need my house, I need to travel. How much is it exactly? Very soon you start finding people shocked. I have 10, 20 million, 30 in the account. Where was this money going before? Because guys are paid good salaries, 500,000, 10 million, 1 million, 500, 100,000. They cannot accumulate and tell you the last 10 years what have I done with this money. We have been able to help them. And even when I sit and I stare at a 21-year-old bottle of anything, I have to think about where does it fit in my plans. Now that sounds too tight, but I don't do it with any suffering because I know the bigger picture of what I'm trying to achieve. And like I did tell myself at a certain age, then I should not work because I need to work and pay bills, but I should come here and work because I'm passionate about what I'm doing. That's the only thing that allows us to provide such a service without necessarily wringing anybody's neck. So really, from the simple people who had never seen money in their account to people who are holding significant amounts, we have all these clients and we have invested for them in regular income. Parents who've never seen consistency over the last 2 years. I'm just getting a paycheck every 3 months. There's money in the bank, and then they start saying, I've never seen this much money in my life, and with such consistency. I'm always buying land or something else. Then when I don't have money, I have so much pressure. So we are able to balance your portfolio so that you have what do you need for liquidity plus what do you need for growth, so that there is some rationale to it. But most importantly, we are not there to create our own thing. We are there to make your thing crystal clear, your strategy crystal clear, and the route to it, we can draw the dots, we can join the dots to how you get there. So that, if you meet somebody and they are hanging out in their nice Range Rover, it's not your problem. You will get there at some point, so there's no pressure. If you want to buy a business, you can plan to when will I acquire, and we have helped people with strategy or even acquiring businesses. So there's a lot we can do just looking at what we've done for our clients, and we are happy to help a lot more people do it.
Okay, and I know Lydia has already touched on this, but Isabella asks, adding to Gary's question, so the one about client success stories, could you touch on your experience working with investment group chamas?
Right. Good. So that's an interesting space. This network is all over the place. Not just mine. The working with chamas is a good thing in that one, it creates obviously the economies of scale provided by individuals coming together. That is a fantastic space. But then it has challenges when they don't have a proper strategy, which is aligned to all the members. What happens is Alex comes in, he thinks he wants to be in the investment because of his children. So he wants to do an education, a strategy that will pay for his children's education. So that this guy's strategy is somewhere 2 to 5 years, he needs liquidity and that kind of thing. Maybe Mel is thinking a bit more futuristic. My child is not going to be in school in the next 2 years. I'm thinking 5 years from now, so we can do some real estate. Okay, then Lydia is thinking, hey, me, I need technology. I need to invest in somebody's business. So if this can get us capital to invest in somebody's business. So when it comes to strategy, you find that the group is disjointed because they cannot agree what we invest in because they have different vested interests. So what we find with successful investment groups is they have an agreed strategy, investment document, investment philosophy. Once that is sorted at the beginning, we are able then to provide the right vehicle. So, any business you touch in this world has a billionaire. Name it. Charcoal burning has a billionaire. Technology has a billionaire. Trash collection, waste management has a billionaire. I don't know, you bottom up, down, you find a billionaire everywhere. So the question is, what business is good for us? Can't be a good answer until you know who are we, what's driving us. Once we have the strategy clear or the objective clear, then we can implement the investments. And we have a number of investment groups, some fairly strong and very big, others, they struggled at making their nascent strategy, so we know where the problem was. And it takes a while to figure who you need to get out of the group, or you need to figure who needs to be in the investment committee to drive the investment discussion. So structure is very important, as well as strategy driven by the goals. You need to know what are the goals. So you have to have proper constitution documents, so that halfway through guys are not arguing and making you lose value because they need you to sell an asset like now when the market is depressed because they need to pay school fees. That's just not well aligned. So you need to align those goals, and we help them think about those things. We see family groups coming, they've invested, they suddenly realized a property. Nobody can make a decision on what we are going to invest in next because of vested interest. So we help to align and ask the right questions in a very professional environment where we are not stepping on anybody's toes to get what is the best decision, the right decision for this particular group, without emotional entanglement and this kind of thing. So some people just come to us because you're a professional, you should have a balanced opinion, which we really try to do.
All right, and Gurpreet asks, is there a minimum amount we need to invest if we want to work with Moran?
No, it's your goals. There's no minimum amount. Where is your goal taking you? Where you can start is what you're asking. I figure that's what you're asking. If you're doing money market funds, that's not us to dictate. Hey, if I've got 5,000, I can start today, then tomorrow I put 10, then another 100, then why stop you? The opportunity is there and nothing stops us. Money has no challenges relating with another penny. Atutoshei hapa ndani sisi wawili, hapa ni billionaires only. No, it doesn't make sense. Where you want to start there. And then we are going to help you build. What we want to make sure is, where do we end up? That's really what's important. Where you start is not, it's not a barrier to us. You want to come, just open an account, put 5,000, and then go figure yourself out. At least you've started. You have any other amount. We don't have fear or favor on the amounts of money that people can invest. It's their goals.
Fantastic. Yeah. And I guess Gaio might be our last question. In case there's any absolute last questions we need to take, please populate them in the questions tab. It's probably easier. Mm-hmm. But Gaio asks, inflation is on the rise. Global recession is also rumored to be on the way. Any ideas of how one can prepare upfront, especially because by default, we tend to be risk averse in such situations?
Come see us. That's a problem we have already figured out. We see it. That's why we were talking at the end about having investments which are inflation adjusting, and of course we need to explain what inflation adjusting. For example, share portfolios, buyout funds, all these things have ways of adjusting to inflation. We also advise you to have a portfolio which has some exposure to currency, because our Kenyan shilling is depreciating against the majors. So what options do I have to keep up with these changes? And are they reliable? And how can I track? We've got, information that can help you make the decision making very simple. So don't struggle with that, by the way, by any chance. Even though you just come just for the information and do one or two things, the information will help you figure, this is the construct I need to look at. What we're trying to drive here is, what you want to achieve. What we know is how and why you should stick to it, because we have seen the long and we agreed on how to get there. So don't struggle with that. We will be very willing to help you with information on how to create a portfolio that can adjust to inflation, or how do I protect myself during this particular period. I think that really was idea, we should tell you we know how to do that.
Okay, and Gabriel asks, do you consult on capital or fundraising for early stage startups?
So we have various teams that are able to do that. Not sitting in my office doing that, or with us in the office doing that. What we do is every time we separate ourselves from the analysis of the opportunity, what we can do is guide you to who exactly can do that. And then the point where we need to put money in, that's where we come in. So we have various teams that do the analysis to see independently, is this an investment we should get into, and they supply that information to us so that we keep an independent position. You can imagine if you came to me and said you have this business opportunity, I think it's great purely because you're my friend, and the next thing, I'm telling clients put money into this thing. It needs independence. So in order to do that, we have various teams that will give you to talk to, and they are able to structure that, tell you where to get the fundraise, they'll direct you to people who fund technology or various other things, whether it's DG or ETC. So very many players, yeah? And then they will come to us and tell us, this opportunity, we have sussed it out, can we put money in it? Is it fintech, biotech, med, whatever it is, whatever opportunities is in the basket, we will be able to look at it, because we have people who've raised capital for over 320 businesses. So we kind of trust them to look at the businesses and give us the ones that we can put money in.
All right. And Jane W. asks, what investment strategies do you recommend that preserve capital 100% as it grows passively? You mentioned government bonds. Any other?
Yeah, so preserving capital. I was sharing strategy, but just to tell you, there's numerous. I see you're mentioning that we talked about government bonds. So you've got to check the structure of the investment to be sure what the preserving of capital structure is about. So we have government bonds, we have corporate bonds, which provide what you call, guaranteed indemnity of 100% of not just capital, but also the interest that you should be making. We have very strong investments around that. Of course, at the minimum, and probably not too exciting, tend to be the money market funds as well. But right now we have instruments which, why you hear me talk about bonds is because if you look at inflation last year to this year, we are about 11%. So if you start in a money market fund, you're basically losing money because it's about 9%. But if you are sitting, for example, in a bond, it's a 13% corporate bond. We have bonds which will give you around about 18%. And pay your capital as well as pay your coupon. And we've done this many years, so we are not testing it now. So we can provide those opportunities for you to look at. So anywhere from Kenya shilling in 13.5% all the way to 18%, we can give you that. The opportunities are there. In dollar, we can give you 12% net, euro 12% net for fixed income. These ones that give you preservation of capital. We definitely have returns which are above the inflation rate. So Jane, if you want to write to us, you want to write to Lydia, you want to write to me, we can send you this information. And by the way, it's non-obligatory that we send you the information. It would be important for you to also do your research and make sure that it makes sense.
All right, I don't see any other questions. So allow me to wind this up. I hope that this was obviously an informative session. Judging by the interaction and the number of people who were able to hold for the entire time, I suspect you did really well. So I just want to say a big thank you to everyone that's interacted with us in the comments section, in the chat box, for all the questions you've asked. I hope this has been mind opening and helping guys at least just have a little bit more information at the very least. I've left the details there for Alex so that you can at least screenshot that. Otherwise, I know the rest of the team from Moran Capital has been linked in the very beginning. You'll find all their contacts in the chat box, so you can quickly go and just take a photo of what you need. But thank you very much to everyone who joined us for this. This has been Nairobi Garage. We thank you also for taking the time out of your day, this gloomy day, if you're sitting in Nairobi, that is, to really just interact with us. We hope this sets you up for success for the rest of the year and the rest of your life, really. But other than that, we'll be following through with the slides. Either myself will share them or the team at Moran will do so. And the recording of this will be up by tomorrow on our YouTube channel, which is Nairobi Garage. Enjoy yourselves for the rest of the day. Take care and yeah, have a very successful year ahead. Thank you and goodbye.